5 bangs in the US economy. Bang number 4, the dollar's decline, how the US dollar could lose its global power, and what it means for your money. For decades, the US dollar has been the world's reserve currency, meaning it's the primary currency used in global trade and held by central banks. However, cracks are forming in this dominance. Countries like China and Russia are pushing for alternatives, with China advocating for the yuan to play a larger role in global trade. Several countries are now diversifying away from the dollar, driven by geopolitical tensions and dissatisfaction with US economic policies. The US government's growing debt problem is also fueling doubts about the dollar's future. With the government borrowing $1 trillion every 100 days, and Wall Street's inability to keep buying the increasing number of bonds, faith in the dollar is eroding. If the dollar loses its global dominance, it could lead to a sharp decline in its value, increasing inflation at home and making everything from imported goods to travel more expensive for Americans. What to sell immediately? Here are the assets most exposed to a declining dollar, which you should consider selling to protect your wealth. Number 1, US dollar-denominated foreign bonds. As the dollar weakens, foreign investors holding US bonds will see their returns diminish. This could lead to a sell-off, causing bond prices to drop and yields to rise, eroding the value of these investments. Number 2, US-focused multinational corporations companies that generate most of their revenue in dollars but have significant costs in foreign currencies are at risk. As the dollar weakens, their overseas expenses increase, reducing profitability. These companies could see stock prices fall by 10 to 20% as profit margin. Number 3, luxury goods and import-heavy businesses. Businesses that rely heavily on imports or sell luxury goods are vulnerable to inflation and higher costs when the dollar loses value. This could reduce consumer demand, causing sales to slump and stock prices to fall. Number 4, treasury bonds. If the dollar loses its status as the global reserve currency, demand for US Treasury bonds will fall, and interest rates will rise. Long-term treasury bonds could drop in value by 15 to 25%, hurting portfolios that depend on them for stable returns. Action steps. To hedge against a declining dollar, consider investing in commodities like gold or silver, which tend to rise in value when the dollar falls. Additionally, foreign currency-denominated assets or international equities may offer protection if the dollar weakens. As global demand for alternatives to the dollar grows, adjusting your portfolio now could save you from significant losses in the future. Follow me for the next bang.